evening and welcome to the Economic Bulletin here on Qnews, where we bring you the latest top economic stories along with expert analysis on the events and trends shaping the regional and global economy. Throughout our coverage, we spotlight key sectors and highlight the defining economic developments of the moment. To start with the latest headlines, we head over to our colleague Henny Saif for the top economic stories. Henny, what do you have for us today?
Thank you, Rehem. We do have plenty of news and developments from the finance world, but we'll start off with Europe, where the Bank of England Governor Andrew Bailey has stated that the recent US-Iran hostilities had not significantly affected the UK's inflation outlook, but warned that the situation remained unstable and the ceasefire fragile. Speaking before the Treasury Select Committee, Bailey declined to comment on political changes, but said the UK's economic outlook was supported by the government's fiscal framework and the Bank of England's monetary policy. He stressed the need to accelerate economic growth while maintaining financial stability, warning that lessons from the global financial crisis should not be forgotten. Bailey also identified artificial intelligence as a key risk for the banking sector and said the Bank of England was working closely with banks to strengthen cyber defences. On to Asia, the General Administration of Customs has reported that China's total goods imports and exports rose 16.9% year-on-year in the first half of 2026 to 25.47 trillion yuan. Exports grew 13.4% to 14.73 trillion yuan, while imports increased 22.1% to 10.74 trillion yuan. June trade reached 4.78 trillion, up 24.2% year-on-year, extending growth for 17 consecutive months. JAC Deputy Head Wang Jun noted that China's trade diversification also continued, with trade involving the Belt and Road Initiative partner countries reaching 12.97 trillion yuan, up 14.8% and accounting for 50.9% of total foreign trade. Trade with Latin America and Africa grew 16.2% and 19.6% respectively, while trade with the European Union increased 10.2%. The Ministry of Commerce and Industry has revealed India's wholesale inflation edged up to 9.87% year-on-year in June, from 9.68% in May, driven by higher food prices, while fuel inflation eased, according to the government data. Wholesale food inflation accelerated to 6.14% from 4.49% in May. Prices of manufactured products rose 7.48%, unchanged from the previous month. Fuel and power inflation slowed to 27.41% from 30.33%, with petroleum and natural gas prices rising 34.75% year-on-year, down from 61.51% in May. The wholesale price index rose to 110.2 in June, supported by higher prices for petroleum products, primary articles, basic metals and chemicals. The government also revised April's wholesale inflation data upwards. In North America, the U.S. inflation slowed more than expected in June, helped by falling energy prices. But the decline is unlikely to rule out another Federal Reserve interest rate hike. Consumer prices rose 3.5% from a year earlier, down from 4.2% in May, while prices fell 0.4% on the month, the first monthly decline since 2020. Core inflation, which excludes food and energy, also eased to 2.6%. However, renewed tensions in the Middle East have pushed oil prices higher again, raising concerns that inflation could rebound. President Donald Trump says the United States plans to expand energy cooperation with Iraq, including new oil deals involving American companies. Speaking ahead of a meeting with the Iraqi Prime Minister Ali Zaidi, Trump said Iraq has tremendous potential because of its oil resources. He said the two countries would strike more agreements, create jobs, and increase oil production, adding that most of the work would be carried out by U.S. companies. Trump did not provide further details on the planned deals. President Donald Trump has backed away from plans to impose a 20% transit fee on ships using the Strait of Hormuz, saying he will instead pursue trade and investment deals with Gulf states. Trump said the strategic waterway would remain open to all shipping except Iranian vessels, following discussions with regional leaders. The decision comes as fighting between the United States and Iran continues, with both sides exchanging strikes and regional tensions remain high. Federal Reserve Chair Kevin Warsh says he will do my job if challenged by President Donald Trump, pledging to keep politics out of monetary policy. Testifying before Congress, Warsh said the Fed's independence is sacrosanct and stressed that interest rate decisions will be guided by economic data, not political pressure. His comments come as inflation remains above the Fed's 2% target despite easing to 3.5% in June. Cuban President Miguel Díaz-Canel has condemned new U.S. sanctions targeting the country's tourism sector, calling them an attempt to strangle Cuba's economy. The latest measures blacklist 10 Cuban entities, including the Ministry of Tourism. Díaz-Canel said the sanctions would deepen economic hardship, while Foreign Minister Bruno Rodriguez also criticized the move. The sanctions are the latest step in the Trump administration's renewed maximum pressure campaign against Cuba. Tourism is one of the island's main sources of foreign income. In commodities, oil prices rose about 2% to a one-month high on Tuesday after the U.S. reimposed naval blockade on Iran as renewed attacks between Washington and Tehran heightened the concerns over energy flows through the Strait of Hormuz. Before the Iran war, about 20% of global oil supplies flowed through the strait. Brent futures rose $1.47 or 1.8% to $84.77 a barrel, while U.S. West Texas Intermediate crude rose $1.26 or 1.6% to $79.4. That put Brent on track for its highest close since June 12th and WTI on track for its highest close since June 15th. It also kept Brent in technically overbought territory for a second day in a row for the first time since March. Gold gained more than 2% on Tuesday after softer-than-expected inflation data boosted hopes of the U.S. Federal Reserve adopting a less hawkish stance. Spot gold was up 1.6% at $4,063.15 an ounce, after falling to its lowest level since July 1st early in the session. U.S. gold futures gained 1.6% as well to $4,070.3. The U.S. dollar fell 0.6%, making greenback price bullion more affordable for other currency holders. And in the markets, global stock markets mostly moved higher, with US and Asian equities gaining ground, while European markets posted modest increases as investors assessed economic data and market developments. In the United States, the S&P 500 rose 0.39%. The Nasdaq Composite gained 0.97%, while the Dow Jones Industrial Average edged down 0.15%. In Europe, France's CAC 40 inched up 0.03%. Germany's DAX rose 0.13%, and the UK's FTSE 100 gained 0.3%. In Asia, China's Shanghai Composite climbed 1.36%, while Japan's Nikkei 225 advanced 0.74%. Hong Kong's Hang Seng Index also rose 0.52%. Those were the top economic and financial stories that we have for now. So we head back to Rehem Mursi in the studio. Rehem.
Thank you so much, Henny, for the updates. And now we move on to our in-depth analysis. Artificial intelligence is entering a new era of scale with unprecedented demand for computing power, energy, and investment. SoftBank CEO Masayoshi Son predicts that AI industry could require $5 trillion in annual investment by 2040 and reshape the global economy. But can technology, infrastructure, and energy systems keep pace with that ambitious vision? Let's take a closer look. SoftBank Group CEO Masayoshi Son has stated that artificial intelligence will require $5 trillion in annual investment by 2040, dismissing concerns of an AI bubble as absurd. Speaking at SoftBank's annual corporate conference in Tokyo, Son noted that the spending would be economically viable if AI accounts to 20% of global gross domestic product by 2040, though he did not explain the basis for the projection. He also forecast that AI data centers will require 3 terawatts of power by 2040, about 1.8 times the current global electricity consumption, with natural gas initially meeting demand before nuclear fusion becomes the primary energy source. Son also envisioned a future in which 100 trillion AI agents independently make decisions, take actions, and communicate with one another.
AI そのものが悪いんじゃないですよ。AI を使って悪い組織、悪い人たちがこれを使って。
To talk to us more about this topic, we're joined from Riyadh by the AI expert and managing partner at Qnews, Lina Timofeeva. Thank you for joining us this evening.
Thank you so much for having me here today. Thank you.
Let's start off by getting your take here about the CEO's take when it comes to AI. He said that AI will require $5 trillion in annual investments by 2040. How realistic are these figures, and what assumptions would be needed for this to actually happen?
So this number sounds very extraordinary, but there are 2 things we have to consider. So from one point of view, what does he consider is part of $5 trillion? And he's not just talking about the GPUs. He's talking around the whole AI ecosystem in terms of the chips, the semiconductor, the data centers, the power, and potentially even robotics. So this is very important. And we have already seen quite a lot of growth in AI, which we've been discussing, over the last year. But in terms of the assumptions, there are 3 key things that need to hold. Number 1, and this is the key one, is that instead of just the humans using AI, how we go now to use ChatGPT for research, we actually have the autonomous systems, all those robots, all those, millions or billions of agents interacting, right? So that's a complete change to the economy. And the other two assumptions, just very shortly, that, the AI revenue grows fast enough. And then, of course, we don't see the deep seek or something which becomes completely cheaper in terms of the use of the AI.
Okay, well, given these assumptions, do you think that the prediction that he predicted that AI could account for about 20% of global GDP by 2040 is something that's viable or even achievable, or is this just being overly optimistic?
So I personally feel that it also depends on the definition of the GDP. I don't believe that the AI companies will account for 20% of the GDP, but as an ecosystem, the banks who are using the AI, the economies, the people, it sounds less extraordinary. The real thing is whether AI will continue to deliver the value and whether we as customers see the value from it and that we continue using it at the same pace.
Okay, well, one of the other things that he said was that suggesting that AI is in a bubble is absurd. Do you agree with this assessment, or is this an over-speculation here for the markets? Because currently at the state we're in, AI is not profiting. Is there a bubble?
Yes, so AI is a powerful technology, and of course, it has an opportunity to transform our economy. And some of the investments are very likely to fail because, we may not understand well enough what we are investing at a point in time. Also, investors can still overpay for it. And we've seen the same with the dot-com bubble, where we had the internet, which is super powerful, but there was a bubble. Now, the question is not so much about AI as a technology, but whether we correctly price the AI assets. And, perhaps that's not the case.
Well, given what AI companies are doing right now, they're spending heavily on chips, data centers, as well as talent. At what point do investors expect to see meaningful returns, and will this be somehow processed into how they price their shares?
Yeah, so I think we definitely saw a lot of movements in terms of the AI adoption over the last 2-3 years. And the next 2-3 years are very critical in terms of proving whether it will really, bring the value and whether it can continue the anticipated growth. Because at the moment, there is a lot of hype, there is a lot of investment based on the hype. But, investors are becoming much more sophisticated and they're asking the questions you just mentioned. So the thing is, they don't need to make every single AI investment to be profitable immediately, but they need to see the revenue and the productivity catching up, right? And of course, the use by the humans of the AI to make sure that the numbers hold.
Well, SoftBank is set to invest about $60 billion in OpenAI. Do you think this is a bold strategy or a high-risk concentration of capital?
It's a very high-risk financial strategy because think about it, it's $64 billion in one privately owned company. So it's a huge bet, right? And you have seen SoftBank historically to invest in some of the companies where they took the huge bets. We've seen them lose, we've seen them win, right? And I think if you read the documents of the SoftBank, it actually discloses that OpenAI may achieve the mission in terms of their AI, but it may fail to maximize the shareholder returns. So there could be certain things that OpenAI can still continue to be successful, right? But on the profitability, it may be not as successful and the investors may be disappointed.
Do you think that SoftBank is possibly also banking on that OpenAI may get government contracts and thus be more profitable?
Well, so OpenAI has been used in different ways, right? And SoftBank also invests into ARM and other places. So it's all the whole ecosystem. And one of the reasons which perhaps SoftBank is saying, there is such a huge future for AI is because they invested into one of the main companies.
Okay, well, Sun also predicted that AI data centers will need about 3 terawatts of power by 2040. That's more than today's global electricity consumption. Is this a realistic projection, and where's the energy going to come from, and what does this mean for the average person living on the planet?
So personally, I would challenge this assumption. So we haven't seen the numbers behind his calculations, but just to give you an idea, it's more than 26,000 terawatt hours a year, right? If it continues at this. So what he's describing is a completely different regime. He's describing that it's not us as humans given the tasks, right? It's essentially that you have so many agents and they're working with each other. So it's a completely different picture from what we're used today. And the thing is, I would be cautious in terms of the sources of the energy, right? Because there is only so much which is realistic in terms of renewables, the gas, right? And longer term, we need to potentially explore the other options if indeed it holds correct.
Okay, well, if AI demand continues to grow as it is expected to, what becomes the biggest constraint? Is it computing power, as you said, maybe energy or regulations, or is it just skilled talent that will run AI?
So I think you have to look at it at different horizons, right? In an immediate instance, we have a lot of scarcity in terms of the power, in terms of the energy, right? So this is for the next couple of years. The second pillar is, of course, the skills, right? Because we may not need AI engineers. We need the business people who can understand the use cases, who can understand whether AI can transform, whether it's banking or the broader industry. And the third one, if the assumptions which SoftBank is telling us hold, right, then of course the energy is going to be a challenge.
Okay, is there an actual issue as well when it comes to talent, where that they may be replaced by the AI and thus they may not be as encouraged to work to build these AI systems?
Yes, so I think that potentially could be realistic because at the moment we see the different news where, colleagues are potentially being replaced by the AI, and there is a concern that you are working to build the systems that are potentially keeping us out of jobs, right? So longer term, we have to upskill, reskill, relearn, but there is a general question of whether we really need this transformation at this pace, right? Or whether we could continue with certain use of AI, but perhaps not as demanding as described.
Okay, Sun believes AI agents will eventually make autonomous decisions and communicate with other ones. How close are we to the reality of it being so autonomous, and what industries will be transformed from it? This goes back to the idea of job losses as well.
Yeah, so at the moment, let's say we are almost 15 years away from 2040, so we're still in the beginning. So AI agents are being used, but they haven't been used, across high regulated industries, end to end, right? So in the immediate instance, we see agents, instead of having a chatbot, we have the agents, we have, some dependable systems, but a longer term, what's going to happen is we still need to look at the industry. So for example, in banking, which is highly regulated, we haven't yet seen a case where, we have a complete autonomy that one agent talks to another, to complete the whole value chain, right? And this still needs to happen. So obviously there is time across 15 years and it could be possible, but it depends on the adoption and all the different risks we've been discussing.
Okay, looking beyond the technology itself, who stands to benefit the most from this AI boom, and who risks to be left behind in the future?
Yeah, so I think at the moment we've seen in 2025, for example, that there were 8 top companies, largely based in the US, who have benefited a lot from the AI boom and a certain number of the CEOs. So I think in immediate instance, it's the people who own the scarce resource, whether it's the chips, the grids, the memory, the power, right? But then longer term, it's about the people who can redesign their processes, the business, to really benefit from their AI. And I guess in terms of risking behind, there is already analysis by the United Nations. There is analysis by IMF that, the less developed countries who may not have access to the chips, to their energy at the same scale, they can actually be behind, and this deepens the inequality, both in terms of skills and access.
So if we look ahead to 2040 here, which, SoftBank CEO had predicted, do you think it is most likely to come true, his predictions? And if so, what's the biggest stretch when it comes to his predictions? And how can it sort of be maintained in a way, as you said earlier, to regulate the workforce without disrupting, human life in general?
Yeah, so I think we can definitely challenge some of his numbers, the headline numbers, in particular the one which I mentioned about the terawatts, because that's quite a big stretch, right? He has certain assumptions which, are a little bit futuristic, so it will take time to really change the economics behind it. But what is very, very important, if we abstract from the concrete numbers, is whether we have a human-centric or more agent-centric economy. So there is a possibility of an agent-centric economy, right? Because we are moving from asking questions to AI to actually having their agents. But I do believe it may take longer than 2040. And, there can be certain elements of trust and, people may not want to move with this future at the same pace and scale.
Well, as you said, the pace is quite fast, even if maybe by 2040 it might not come to fruition, but it's quite fast now. How should policymakers respond if AI becomes as economically significant as Sun had suggested? Are governments moving fast enough to deal with AI and regulate it in a way that it won't harm the human workforce?
So what happens is there is a different approach to the regulation across US, Europe, China, and some of the other geographies, right? Some are more cautious, some are less cautious. I personally feel that the main thing is we are innovating, so the regulation should keep up the pace with the innovation, working together with the industry, working together with the banks, with the financial services, with the organizations, right? At the moment, there is still no clear, perfect regulation for everything. There is exploration on certain things like the biases, some of the things, because AI is also fighting AI and we're getting much more risks and cyber threats and beyond. So there is an importance of, working collaboratively across the governments, across the regulators to learn the best from each other, to be able to regulate. But there is much more to be done to make a faster pace.
Okay, thank you so much for your insights from Riyadh. That was the AI expert and managing partner at Qnews, Adina Timofeeva. Thank you for your insights and thank you for joining us this evening. Now we turn to the fan favourite as all eyes remain on the 2026 FIFA World Cup. Another game is unfolding alongside the tournament. While football stars battle for glory on the pitch, a different contest is being played online. One for views, engagements and influence. Let's take a closer look. From TikTok and YouTube to podcasts and live streams, the 2026 FIFA World Cup is proving that attention has become one of the sport's most valuable currencies. How the creators' economy is transforming the business of football. Here's a story.
The World Cup is no longer watched only from the stands or the sofa. Today, it is experienced through millions of smartphones around the world. As every goal, celebration, and controversial decision unfolds, another competition is taking place online, where creators, influencers, and athletes are racing to capture the world's attention. And for brands, the attention has become one of football's most valuable assets. According to Goldman Sachs, the global creator economy is currently worth nearly $192 billion and is projected to exceed $470 billion by 2027, with major sporting events accelerating that growth. During the 2026 FIFA World Cup, fans are no longer consuming only the 90 minutes on the pitch. They are following behind-the-scene content, live reactions, podcasts, short-form videos, and social media debates, extending the tournament for beyond the final whistle. Brands have taken notice. Global companies including Rexona, Diageo, and Coca-Cola are investing heavily in creators alongside football stars, shifting marketing budgets toward digital-first campaigns designed to engage younger audiences in real time. For many companies, creators are no longer simply promoting products. They are shaping conversations, influencing purchasing decisions, and building communities around the tournament. At the same time, footballers themselves are becoming media brands. With hundreds of millions of followers across social media platforms, players now generate value for beyond their performances on the pitch, offering brands direct access to global audiences. The next frontier may already be emerging. Artificial intelligence is beginning to enter the creator economy, with virtual influencers and AI-generated content raising new questions about authenticity, trust, and the future of sports marketing. As the World Cup continues, one thing is becoming increasingly clear. Winning the match remains important, but winning the world's attention may prove just as valuable.
Cairo International Stadium has hosted a mass celebration honoring Egypt's national football team following its historic 2026 World Cup campaign, where nearly 40,000 fans attended the event, marking the team's achievement in reaching the round of 16. Players toured the pitch in a ceremonial bus parade, greetings, cheering supporters amid flags, music and dazzling lights, laser and firework displays. Families joined the celebrations as patriotic songs filled the stadium. The event featured performances by singer Tamer Hosni and formal tributes to players and coaching staff, reinforcing national pride after the team's global achievement. Joining us now is Amr Rawi, a CEO of Game Changers from London. Welcome, sir, and thank you for joining us this evening, and hope you're enjoying the tournament so far.
Thank you, Raham. It's a great pleasure to be with you today.
Our pleasure's ours. Let's start off by asking you about the World Cup that has become more than just a football tournament. In this day and age, it has also become one of the world's biggest creator economy events. How do you see that?
For sure, you've just mentioned it. Today, we're not just talking about the goals and the matches and the match results. We're actually talking about money, mobile videos, social media, and the new power brokers of the football culture. The 2026 FIFA World Cup in North America is set to become the most commercially valuable sporting event in history, with a projected revenue around $10.9 billion. This is around 56% higher than Qatar in 2022. But the real story isn't just how bigger the stadiums are or how more sponsors. It is actually the mix of what, as you mentioned, the creator economy, the influencer marketing, and the AI-powered fan experience. So for the first time, we're seeing matches are watched around on TikTok, in YouTube, Instagram, fan zones. And this is as valuable as the actually what's happening on the pitch itself.
Well, what you're saying there is also what Goldman Sachs is saying at the moment. They're expecting that the creator economy will reach about $470 billion by next year. So given the large number, how important are these global sporting events in driving the growth of the creator economy?
It's very important. As I mentioned, for the World Cup, we are looking at world records in every single area. So the broadcasting rights are going to be exceeding $4.2 billion. The sponsorship revenue, we're talking around $2.8 billion. And the match hospitality at around $3 billion, but which is, again, triple Qatar level. But that jump and an increase is not only through the traditional broadcasting and the traditional media. The biggest value is coming from the impression, the social clips, the creator economy, and the conversation that's happening in social media. So during just the first week of the tournament, one of the AI-driven social intelligence reports recorded around 9.4 billion impressions and 1.4 billion engagement. We haven't seen something like this before. We're talking about engagement across 25 platforms.
Yes.
And again, that makes the World Cup is the biggest and the most socially engaging sporting event in the history. But this is all well and good. The creator economy and the influencer marketing creates awareness. The question is, how could you turn that awareness into monetization and real value?
Well, now brands are increasingly shifting their market budgets from the traditional, media, television, advertising to these digital creators and influencers. Why do you think there's a change or a shift towards these creators? And also, you mentioned a number of times here that there's a difference between the 2022 World Cup and what we see today when it comes to this influencer economy. Why the shift?
I mean, the shift is very logically due to consumer behaviors, right? We're seeing younger generation are much more right now interested on second screen experience. That's one element. So consumer behavior is a very important factor. The second important factor, the current TV broadcasting, the traditional TV broadcasting are not fulfilling the needs of the personalization, the interactivity that you see on the social media and the digital marketing and fan experience platforms.
So this is why you think there's a shift when it comes to advertising towards social media rather than traditional TV?
100%. I mean, the the traditional broadcast has not been disrupted for a long while, and now we are seeing more signs for that disruption to happen. We are, as I mentioned before, what we're seeing in terms of the influencer marketing and the creator economy is the tip of the iceberg. Underneath that, there is a big and important element of data, technology, and AI that is very important to move that awareness and interest of the fans into personalized experience, into revenue, into sustainable commercial engagement that for the right holders and for the sponsors to be able to monetize our awareness. So many, sorry, go on.
So would you say that, given what you're just saying right there, that creators are somehow able to influence the decisions of fans in these big sporting events on what to purchase and what not to, what to support and what not to?
Yeah, 100%. I mean, as you've mentioned it before, a lot of the sponsors are moving away from just spending on becoming the key sponsor and traditional broadcast feeds into reaching out to influencers and content creators in order to ensure that their message and their brand reach out to the younger audience. So that's absolutely right.
One interesting thing here also is that creators aren't just, the average Joe. Footballers today are also content creators with massive followings and massive audiences. How has social media changed the commercial value of athletes? And what does this mean for the average person and even the athlete themselves? Does this make bank for them?
Absolutely. You're talking about one of the key trends here, Reham, which is what we have seen in the past few years, that the athletes themselves become brands in their own. If you think about the biggest athletes between Mo Salah, Mohamed Salah, if we say Mohamed Salah, Ronaldo, should we say Messi now? Let's say Messi and Neymar.
Big size, yes.
Exactly. So the size of their audience exceeds the biggest brands in the world and the biggest leagues. They exceed the FIFA followers, they exceed the NBA followers, they exceed the Premier League followers. So they are their own brands and they have a voice. And we have seen the impact of what's happening in the Egypt-Argentinian game in terms of the buzz that happened around the social media and the social sharing of all that content. So yes, you're absolutely right. The athletes themselves become their own brands. I will go back again to the same point that I was referring earlier. This is all well and good. Sponsors and brands should not only be counting likes, comments, and engagement. They should be thinking about sign-ups, registration, knowing who their audience are by gathering the data and being able to push that awareness into the bottom of the funnel in order to generate revenue from that engagement and awareness that is being created.
Well, part of the buzz that you were just talking about there is the emergence of the use of AI-generated creators. How do you see these artificial intelligence pages becoming meaningful? Are they going to be important when it comes to sports marketing, for instance, or influencing the audiences? Or Or do you think that the average person is probably going to look for a more authentic human voice when it comes to especially sports content?
In actual reality, both, Rihan, because what you've just mentioned, that the last sentence about the authenticity is really important. We cannot expect AI to be replacing all the narrative. We need that authenticity. But where the AI and data and analytics will going to be coming very important and really crucial is the scale, is the personalization, being able to tailor the experiences to different people based on their need and based on their behavior and based on their usage. We have different layers of fandom. For many, many years, many people were thinking about the football fans are the people that sits behind the goal, or in Al and Zamalek, who sits behind the goal, at the hardcore fans. But no, what we have seen in the World Cup here, and specifically in Egypt, we've seen different layers of fans who were going to turn on the TV just for the major occasions. We have seen younger generation. We have seen females. We have seen families. Everyone is interested. The whole idea is how you use the power of data and analytics in order to analyze the behaviors, in order to segment your audience, in order to deliver an experience that is relevant to every single audience. And this is where the AI and data and analytics and fan experience technology is become really cornerstone in what you deliver in terms of experiences.
Well, thank you so much, but unfortunately we're out of time. From London, that was Amjad Rawi, CEO of the Game Changers. Thank you for your insights and thank you for joining us this evening. That brings us to the end of the Economic Bulletin for today. Thank you for watching and stay tuned for more updates here on Q News.